You just asked the biggest problem that every one of us is facing today, whether it's VC or the operators or the CXOs in the companies.
The SaaS apocalypse is really driven by buyers understanding their environment and understanding cloud and understanding what they've historically purchased.
Especially if you're going to take the biggest of the oil and gas industries like the Halliburtons or the Schlumbergers, or get into the manufacturing perspective, Airbus, they are not focused on building their own products.
I think you're really going to love today's show because you get to trace a person, my friend Ankur, who went from working in a big company and having startup dreams to actually starting a company and then growing and scaling it in just a couple of years, in less than a couple of years, and what motivated him to go start it. And I find it striking that what really motivates him is seeing the buyer pain. He's created a multi-sided marketplace because that's what he specialized in over the last 15 years. And it's that buyer pain that really motivates him, and that helps him build a much better environment, a better understanding by understanding that main customer, how then to put together a system that in today's AI-driven world helps to put people's arms around some of the unpredictability that's occurring. So we're going to talk a lot about this notion of SaaS-pocalypse and how, because with AI, you're able to build your own software using these AI tools, and you won't need traditional software or traditional cloud capabilities like you did in the past. And what's actually happening is it might actually accelerate the adoption because now you have multiple ways of going and multiple ways of putting things together. It's all happening in the cloud. So what's going to be striking today in today's discussion is maybe the SaaS apocalypse isn't what it seems. And that will drive a lot of what we're going to be seeing in the next year. And then when we get into this whole discussion of very large venture capital rounds and how all these monies are being pushed into a few companies and potentially crowding out others, how you're going to listen to two folks, one an investor and one an entrepreneur, that's saying, we're just going to go about our business and get stuff done and drive growth. And that alone is going to drive things, as opposed to worrying about how one is crowding out the other. But it does pretend a potential situation where we could be in another 2021 where SaaS companies exploded and then dropped, or it could be like 2008 or 2001. And that's some of the things to be concerned about. So lots of great stuff today, plus learning more about who these amazing people are. So really excited to bring you Ankur and Priya. Hello and welcome to the Spark of Ages podcast. Today, we're doing a special roundtable discussion on the power of cloud marketplaces, the so-called SaaS-pocalypse, and the new rules of venture capital and AI unit economics. Our guest today, Ankur Srivastava, the CEO and founder of Flywheel, the world's first cloud meta marketplace transforming how enterprises buy and sell software across AWS, Azure, and Google Cloud. Previously, he was an elite sales leader at Amazon Web Services, or AWS, where he spent 5 years as the head of field and customer business development for the AWS marketplace. Now he's building what's next, a platform to simplify the broken enterprise procurement playbook and help companies maximize their existing cloud commitments. Priya Ramachandran. Priya is the founder and managing partner at Foster Ventures, an early-stage VC firm she built from the ground up to act as the startup of the VC world. She is an operator turned investor with significant experience building and scaling products at companies like Coupa Software, Better Cloud, and Intel. She focuses on pre-seed and Series A investments in B2B tech and supply chain, and continues to passionately foster the US-India startup corridor with her work with SaaS Boomi. Ankur, Priya, welcome to the Spark of Ages.
Thank you, Rajiv.
Thank you, Rajiv.
So what is Flywheel? Flywheel operates as the world's first cloud meta marketplace, designed to unify and simplify how enterprises buy and sell software across the major hyperscaler cloud providers. That's Amazon Web Services, or AWS, Google Cloud, and Microsoft Azure. Rather than acting as a traditional software vendor, Flywheel's business model relies on serving a two-sided ecosystem comprised of enterprise buyers, like procurement or finance teams, and software sellers like ISVs or independent software vendors. So Ankur, other than meeting me, what sparked you to start Flywheel?
First of all, thanks again for having me, Rajiv. It's so good to be here and to be actually be able to talk about Flywheel openly. I know in our last podcast, it was in stealth mode. It was a secret. We couldn't talk about it, but I'm super excited to be chatting about it. What sparked it really was the buyer pain. What we saw was that our procurement buyers, our folks in finance, and even people using technology or cloud provider marketplaces were really trying to optimize the ability to leverage them in a succinct way to mechanicalize cloud commitments that they were making, leverage cloud marketplaces in a way where it added less friction and more benefits, and then to be able to drive really what were the savings that they were going to be able to experience by leveraging both of these solutions, and then package it all back together, back to the business and say, this is what we're able to achieve by stacking all of this together. And it was really buyer empathy that drove our creation of Flywheel.
That's pretty cool. So, I mean, you saw it while you were at AWS, right? I mean, you were there at AWS working with all these large software firms, helping them market themselves in the way that they were set up. And then you saw how that came together.
I did. Priya's a legend herself in terms of how much she's experienced the ecosystem from a procurement perspective. And so when we originally came together and talked about the journey, it was a natural fit to say the matching of this two is the missing link in what we think is the entire cloud procurement journey for these buyers. And within AWS, who has partnered with us really well, and I have a lot of gratitude for how much access AWS affords us and how they work with us today. They are also ensuring that we can go back to those buyers and reveal to them this ease of transaction that we've now afforded them through the marketplace, but also tying it back to the cloud commitments has been just a massive opportunity to work with. So yeah, AWS was where I got to understand the problem when I was there. And now working at Flywheel, I get to stand next to AWS and our buyers and sellers, and now really build the next wave of the opportunities that we see over here in this market.
And thanks for that. And this is for both of you. So, and Priya, you can start first. We're currently witnessing what can be called a paradox for FinOps, where cloud efficiency rates, which are percentages of revenue consumed by cloud costs, are dropping. And even as formal cloud and AI cost management programs are expanding. So from a marketplace procurement perspective, and I know you have a lot of this, and as a venture capitalist, why are traditional FinOps practices failing to rein in the unique complexities of AI costs?
Thank you, Rajiv, for having us here. And what a wonderful Friday morning to do this session. This is a beautiful question that you asked, right? Traditionally, FinOps are designed for very predictable and either actually license-based costing or user-based costing, or even actually like infrastructure-based, right? Even with respect to the cloud cost, it used to be static relatively, right? Usage perspective. But with AI, today the whole thing is changed. What we are thinking about is the inference costs. Inference costs have not been predictable at all. And so in today's world, FinOps are really in this key spot where they have to move from being reactive to being proactive, which is the problem in my 2 cents that I see. Because AI is really introducing a very volatile and very high dynamic consumption, which is making sure that we are unable to map any of these spend or spending to real tangible value kind of perspective. And so that is where we are moving away from very structured vendor management approach, which has been like so far good and easier, to the wild west of how can even these FinOps, the procurement team, can work with actually the vendors in a very different perspective, right? Because it's a totally wild west in today's world too. And so it's all completely changing, which is where the problem is with respect to FinOps. And so that's why we also invested in Flywheel, which is bringing in the core problem of FinOps, procurement, and the real usage together, in my 2 cents, when we are going to put it together. Because purchasing in the past had been like much easier because we were able to, even when our Ankur was with AWS, of course, people used to talk about the cloud-based pricing to be like unpredictable, dynamic. But when we think about it, even still, that was like way more predictable. We were able to get like volume discounts. We were able to go out and have like much more stronger discussions around like how to price, how to predict, and things like that. But that's not the case today. The whole purchasing is changed because no one knows as to what the inference cost is going to be. How much money needs to be like spent to solve a particular ticket is not actually like decided or cannot be even like planned as of today. Volume discounts as in cloud providers is not well defined or done today.
The whole game has changed, right? Or it was much more predictable. I get so many seats, I get some usage equation. Those whole usage equations have been thrown off, right? I mean, is that what you're seeing, Ankur?
Yeah, actually, just to
when
kind of augment Priya's comment, Priya nailed it, right? So a couple of things. We've been in existence since July 2024. And since then, we've been maniacally focused on equipping our procurement leaders to make better decisions. That's the first piece. Our Flywheel's centerpiece is the buyer. We have a very strong buyer empathy. We're obsessed with making the buyer successful. And Priya laid out a couple of points. First of all, we need to make sure that these buyers understand across the board how the CFO's making the cloud commitment and how are they tracking towards those cloud commitments. Today, you get these cloud usage reports or cost usage reports from each one of the hyperscalers. That's an indication, right, to Priya's point, that you could track what the utility-based pricing looks like or utilization looks like in the cloud. But if you think about what happens with Marketplace, it's now shifting the purchase model for all these individual components from the cloud providers or in their marketplace. Well, if that's the case, then these solution sets probably have some level of consumption data that's being made available. And that historically, just for everybody that's watching this thing, has been what's called FinOps, right? What we're now finding is when you break integrated into the procurement process itself, that transaction isn't a line item that sits in a procurement system like a Coupa or a Ariba. It's actually a living, breathing asset. I was actually with a buyer and they said, now you're introducing the concept of a transaction lifecycle. What that means is that transaction has happened, it's closed, and now we got to monitor it. It has a pulse. And that is what we're now bringing to the table. So within Flywheel, we're actually about to make an announcement with one of the largest ISVs on AWS's marketplace who's integrating within us, and we will be able to give buyers the ability to track exactly how they're tracking for that usage. And a simple example is this. Let's say they buy something for $120K, that means $10,000 a month, and all of a sudden they see tick usage within the first month to be 20,000, the second month 20,000, the third month 20,000. Now they're basically going to be 200% of what they paid. Well, we will alert them within the first and the second month that their usage is high and actually work with them to say, hey, by the second and third month, you should probably renegotiate that contract, right? So buyer empathy has to be, we have to save the buyers money.
Right, because now they're consolidating all their spend across not just the marketplace, but across multiple marketplaces.
That's right.
So now you can bring that whole set of information to them and help them predict. Yeah, it's time to renegotiate. Maybe it's time to change, time to shift maybe to a different alternative. There's all sorts of choices you can give.
Well, no, by doing so, we're actually protecting that ISV or that seller even more so. Because one of the biggest things that happens is people get all the way to the end of the contract and they go, wait a minute, this was 200% than what I paid. By alerting them earlier, they can right-size that contract and they can maintain a healthy relationship between both parties.
Sides.
Yeah.
Both sides win.
That's where it becomes like, proactive versus being reactive, right? FinOps should be like moving towards not just looking at the MRRs, right? Or the monthly recurring revenue kind of a perspective to actually real-time consumption-based tracking. That should be the key thing which needs to be focused on. Otherwise, it's going to be like a big, uptick with respect to spend. And that becomes a big problem, especially to the office of the FinOps and the office of the CFO.
Right, it makes it more predictable.
Yeah, how can they forecast?
So along that line, Priya, like top performers in the AI space are actively shifting from legacy subscription models and moving towards pricing based on outcomes or consumption. Some are outcomes, some are consumptions, charging per case closed or per ticket resolved or just usage units. From your view as a venture capitalist, what has been the internal operational hurdles companies face when they're trying to tie their massive underlying compute spend to these highly specific outcome-based customer transactions?
Oh, you just asked the biggest problem that every one of us is facing today, whether it's VC or the operators or the CXOs in the companies. Because when we are talking about outcome, we have to know that the cost to produce an outcome, it's not static. This is something I briefly said before also, is that one ticket might be actually, especially with AI today, we call something called as tokenized pricing or token-based costing. One of the tickets might be actually like solved by using actually like 2 tokens versus something else might be like spending like 3,000 to 4,000 tokens.
Right. If you do something agentic, you could be using like 20 tokens that you didn't even realize because
Yes.
it's not a single action. It's hitting so many systems at once.
Yes, that's true. And so when we are thinking about it, outcome-based pricing is something which is still in progress in my 2 cents for anyone to be saying that we have nailed as to how we can do it. This is still work in progress because what happens is the token usage can be, we don't even need to wait for a month. It can be up even in a single day or in a couple of hours. And forget about the procurement team. No one would even know that this has happened until something stops. In case if there is going to be like a break point saying that this is the maximum allowed, no one is even going to know until the whole thing comes into place.
Otherwise, yeah, you hear all these simple little bills. And like I've seen it with my team. They're getting alerted as they go.
Yeah.
And then all of a sudden, like, holy crap, we didn't realize we're spending this.
So I'm very data driven, and I come back with buyer facts. And we were just in a meeting recently with a buyer that basically said, people forget, people have short-term memories. Remember when SaaS first came out and people were swiping cards and using it and bringing it in, and people thought that was just a great gateway to letting SaaS seep into an organization to have this technology sprawl. And that was great until you all of a sudden hit 200 users on a credit card and you were paying $10,000. And then procurement came in and said, nah, that's not going to happen. We're going to curb this and it has to go through it. And everybody's super excited with this whole tokenization. And they believe that, yep, we're going to just slip right into these enterprises and exist and we can have massive billings. What will happen is procurement teams are now catching up. The one thing that the cloud has done has modernized their thinking from the traditional perpetual licensing model to cloud-based model to SaaS-based model to consumption. So you're dealing with a much more savvier procurement organization. And now they're tracking all of this. So they're aware of how SaaS came in and blew up within their organization, and they put all those controls in place. And Flywheel is now positioning itself to become that gateway that will allow AI companies to actually enter enterprises in a secure fashion where they can be expedited in their observation. And the procurement teams are on board with that experience as well. Because we can already tell you that any type of AI sprawl, they're curbing.
Right. So this is bill panic prevention, right? Or bill panic optimization.
Yeah.
So
And
definitely.
that is also the
definitely nailed it.
exact reason as to why even Foster Ventures ended up partnering with Flywheel in this particular journey also. Because when we are talking about even the outcome-based pricing, another most important thing that we need to think about is revenue recognition, even from the overall company's perspective. When the buyers are buying a particular product, they have to be also like thinking about the ROI as an aspect perspective, their own rev rec kind of a perspective. And whether it's the buyer or the seller, they have to be like tracking on how it's being done. And with outcome-based pricing, this also is another one of the biggest topics that we need to be like dealing with separately on. How are we going to be tracking the rev rec for both from the buyer side perspective and the seller side perspective, especially for us? Because this is basically done post the action is completed. This is becoming more like the services revenue kind of a perspective, because services revenue is recognized only after the services is performed and the value is delivered, which is very different from the subscription term and stuffs like that too. And so in my 2 cents, the uncertainty in revenue is going to be a key thing. Again, that ties back into the beautiful thing of what we spoke earlier, is from the perspective of getting into consumption-based forecasting, right? Consumption-based, real-time
That's a whole different
tracking.
game. Yeah.
Exactly. For the outcome-based pricing perspective too, how can products like Flywheel be a real-time actually consumption-based actually forecasting provider, not just working with the office of the chief procurement officers, but also working with the office of the CFOs. That is how we should be thinking about creating that sweet synergy by using the cloud marketplaces, how to be like using products like Flywheel and driving the outcome-based pricing as like a great value, or even proposing and bringing that up in the future too.
Thank you for that. That's really great. Let's think about one of my favorite areas to talk about is go to market. And this is a big change across multiple functions. So this is for both of you, and Priya, maybe touch on it, and then Ankur jump in. We are rapidly approaching an agentic economy where AI agents will take over functions across sales, marketing, procurement. It's communicating directly with other AI buying agents. So if the cloud marketplace becomes a space where algorithms negotiate with other algorithms based purely on token metered economics, what happens to the art of go-to-market, brand affinity, human connection that you both have built your careers on? Stuff that both of you are great at.
Rajiv, ultimately people sell to people and people buy from people. We can be using a product or AI to be talking on our behalf, but empathy, which all of the greatest leaders in the industry have been like talking about, whether we take actually Jensen or you take even our greatest actually Warren Buffett of the world, one of the key things that is going to be needed is empathy, which is not going to be like brought in by an AI agent kind of perspective. And so the key thing I would love to again stress here is people is buying from people, people are selling to people. And so it's going to be like we using actually a dishwasher or a washing machine in the past. That was a great revolution that happened. And before that, for sure, back in India, my parents or my grandparents used to have people coming home, helping them out with washing the clothes or like the dishes and things like that. But they were given the job of actually putting the same clothes in the washing machine and taking it out and keeping out of the dishwasher and giving them like different kind of jobs kind of perspective too. I would love to bring the same kind of simple analogy to the world here is it is the empathy that is going to be like bringing out the whole branding perspective that you brought up to. A brand cannot be developed for a Patagonia with an agent. A Patagonia's brand is developed with people and the empathy that we drive around it. And so I'm not worried. And indeed, I would say that with AI agents, the great GTM leaders will have more time to be actually creating and working on much more empathetic and great selling perspective and spending more time in actually like generating the same kind of value in their next generation of next gen coming out of colleges and things like that too. That's my 2 cents.
So no, I don't think agents are going to take over fully automated buying. I think maybe for tactical stuff that is repeatable, it can happen. Flywheel is digging into this data very vastly. And what we're seeing is, let me just talk about purely from a mechanical perspective, be able to talk to each other and say, you want to buy this SKU or you want to renew this SKU, let me go ahead and start the process. The problem that exists is there's a data problem. And the data problem is massive. People who have gone into the procurement system and have entered something like Red Hat have entered it in multiple variations. They've entered it as, 1 word, 2 words, incorporated, ink, dot, comma. There is a lot of effed up data out there. We realized that, and we eventually extrapolated that data and we started converting it. And today, Flywheel owns a patent on something called FUID. It sounds exactly what it is. We took all the effed up data, we pulled it into our LLMs.
Is that what you call it? Let's go through the FUIDs. Yeah.
Now, and we assign it for the first time ever, a product catalog ID that is owned for every software product that's transacting, and you could generate a product SKU yourself. And the output of it is something called Flywheel Universal ID. So we take all the effed up data, we clean it up, we assign an ID, and we assign a record, kind of like an ISBN number. And now it becomes transactable across all the cloud marketplaces everywhere. That record is retained. Why is that important? When we initially started even looking at the matching, it was so interpretive that one particular SKU within a customer environment could not match a SKU in a hyperscaler, and didn't even match what was in the actual vendor location. So if we're talking about buying at scale, matching has to be the one thing that has to take place initially to be able to say, I want to buy this thing. And I can tell you today that the world has so much mess sitting in its data. I like to jokingly say you got to clean up your data warehouse. And that's the initial task that we're taking on. So there's always going to be a human in the middle. Why? Because that human in the middle has to interpret and teach these LLMs and these AI models what they're actually looking for. and decipher its accuracy.
So maybe more of the art, maybe more of the art is not in all this time arguing over
That's right.
all these interesting potential discrepancies. It's the art of actually making the deal in the first place and providing the value in the first
That's
place.
right. You're looking for relationships, to Priya's point. You're looking for people who have expertise. You have people that are like checkboxing. So what you want to become is an SME that has A, good hold of the systems, and B, is able to then do their job at a massive scale and has empathy and relationships.
So now, Ankor, now that we talked about AI coding agents, we have AI coding agents and we're automating complex workflows. There's been a lot of speculations of the SaaS-pocalypse, where the value of traditional software is being fundamentally questioned. So as you build Flywheel to transform how enterprises buy cloud software, how do meta marketplaces need to adapt when the buyer and the user might increasingly be an autonomous AI agent rather than a human with a credit card?
I still can't say it. I just say SaaS-pocalypse because I can't blend it. Every time I say it, I screw it up. So I'm glad that you were able to do it. We're watching our buyers buy, right? And I think where a buying agent is an AI solution, I don't know if we're there yet for that because of the fact that, somebody's not going to be like, here's a $10 million renewal. Let's go ahead and have you renew it through, an AI agent. There's a lot of terms and conditions that have to happen. I think, Reggie, what we'll see, and Flywheel is becoming at the heart of this, is we will see sort of a stepping stone evolution. The SaaS-pocalypse is really driven by buyers understanding their environment and understanding cloud and understanding what they've historically purchased. They understand nuances that if an ISV is selling them a solution and it's available in the cloud, that means their infrastructure dependency has become more optimized by using cloud solutions. Hence, that traditional cost should adjust. And the buyers are right-sizing their environment based on data that they have today, and their data set will become even better. For example, the buyers are tracking usage data, right? As we talked about the FinOps use case, the buyers are tracking benchmarking data. They're looking at comparing contrast and saying, if we see that there's 10 customers paying $100 and I'm paying $130, that needs to be right-sized to the $100 value. So they are asking for those adjustments. What this isn't is a complete annihilation of software. It's a right sizing of bad deals that have historically taken place, and the buyers deserve it. At the end of the day, if they're doing the right things, they should be able to get the savings back, right, in their organization. And that's what we're seeing.
Talking about the notion of SaaS-pocalypse, just in general, I know we talked about the marketplaces, but just give me a quick opinion of this. Are you seeing, since you're seeing both sides, are you seeing a downturn from folks procuring SaaS or enterprise SaaS versus them building it themselves with AI, using AI systems and AI agents?
I'm not seeing a downturn. We are sitting on today $2.5 billion worth of spend, and we're telling you that buyers are going to be mechanicalizing that spend, and we're getting more and more spend ingested from the buyer. Priya, I'll invite you for your opinion on that.
I completely second Ankur in that. We aren't actually saying, especially if you're going to take the biggest of the oil and gas industries like the Halliburtons or the Schlumbergers, or get into the manufacturing perspective, Airbus, they are not focused on building their own products, especially when it's going to be with respect to direct spend supply chain. They've got bigger problems to deal with from the supply chain angle in today's world, especially. And this is the last thing that they're going to be thinking about, because one small little screw that Airbus need to procure, if it is delayed by even a week, it can delay the whole flight manufacturing by 3 to 5 years. No one is going to be taking that kind of a change at this particular point. But Raji, what is happening is AI is a great technology. And so there needs to be actually a lot of upgrade that needs to be happening even from the mid-range systems of AS400 kind of perspective, or the olden days of, actually well-established mainframes kind of perspective. There are many industries in the world today where they are still sitting on products which are 30, 40 years old. Even actually, I'm going to give an example of Tote AI, where Storm Ventures and Foster Ventures have invested together. They're basically replacing 30, 40 years old convenience store software, which has not been touched at all.
Yeah, so there's so much more to do. It's funny. Yeah, it's funny you bring up AS400, but there's so much more to do. Yeah, that this is actually enabling it.
My 2 cents is we are bringing in the power of AI to be revolutionizing this great vertical software, or thinking about the direct spend software, which is not being done greatly by any of the players today in the world, existing greatest players in the procurement too. And procurement, or like actually like direct spend management for a manufacturing industry, say for example, in actually like a pharma industry is way different from a CPG industry. It is way different from auto industry.
Yeah, and there's still a lot more to do. Yeah, it's a
Exactly. There
lot.
is a lot more to do. And so I personally, and I second Ankur in that we are not going to be like killing all of these big products and things like that. Everyone have got their own problems to solve, own things to work on. It is now the time for great companies to think about how can we go ahead and build great products using the power of AI.
Can I just add one thing to that comment? This is a very short statement and it's a very important one. What we're experiencing is the industrial revolution of our time. We're redefining the lanes that the new data set will travel on. And then on top of that will exist the foundation of all this AI stuff that we're seeing that's going to be more enterprise grade, approved and governed and compliant, right? So that's the journey that we see happening in the next 2 to 3 years. The good news is it's accelerated drastically.
That's awesome. Let's talk about the opinions of today's 2026 venture capital environment, funding environment. So I'm going to ask for some opinions in this area. So the venture capital model last decade is facing a reckoning. And the growth at all costs playbook is being rewritten by massive capital concentration and the rise of AI native efficiency. So to put our guests to the test, we are looking at the structural health of the startup world and how mega rounds are fundamentally shifting the landscape for everyone else. We've compiled several controversial opinions on the 2026 VC ecosystem, from the death of mid-sized funds to the rise of agentic startups that barely need capital at all. So here we go. Here's number one. Quick opinions on this, because I have a game to take you guys to. So the crowding out effect has narrowed the VC lens so much that 90% of profitable, high-growth B2B SaaS companies are no longer investable by top-tier standards. Unless you have a path to a $10+ billion exit, you are invisible to the ecosystem regardless of your unit economics.
I'm an entrepreneur and I'm always raising as well, right? So, so are you asking me if it's true or not? I hope it's not true.
What's your opinion? When you hear that, how does it feel to you when it hits you?
It makes sense. However, I think there are VCs or folks in the venture community that understand that there are certain stepping stones that have to take place before they just go full bang. Like, you have to have that approach. And I think every company today needs to demonstrate a clear path to agentic workflows, AI utilization, and that $10 billion revenue path. I think that makes sense. In what we're doing, there has to be a stepping process. The reason why we are fortunate enough to be invested in by Storm Ventures, Foster Ventures, is because they see the journey that's ahead for our buyers. And so I would say it's absolutely possible, it's probably accurate, but those folks need to understand very clearly that there is a path forward to that, right? So that's my opinion on it.
But Rajiv, that's a beautiful question, but I also like to disagree. In today's world, I think we are looking at more of MRR when we are going out and calling them as like a true revenue kind of perspective, which is way different from what actually is going to be the recurring revenue for next year too. And this comes back to the same point of, hey, this year we are spending 10 different tickets with 20,000 tokens each. Will the same thing going to be repeating next year? That is where the revenue is coming from. Ultimately, the public market thinks way differently from what the private market and we VCs invest in. And so we need to be investing in companies which can be very nimble enough to adapt and change to the new technologies that's coming in. But at the same time, they should be thinking always about the usage and the true recurring revenue perspective. That is when we can build a $10 billion revenue generating company and not just actually a valuation.
Market value. Yeah.
Yes.
Okay, here's next opinion. The 51% spike in average funding round size, which is the average size of a startup funding round, has shot up 51% in 2025 from the previous year. It's a sign of extreme VC laziness, not market health. This isn't because startups suddenly have better business plans. It's because massive funds are under immense pressure to deploy their dry powder into fewer overvalued companies.
This is a repetition of 2021 and 2020, and that is all. And we did see the impact of that in 2023, 2024. I can just say that it's just a repetition.
Great. Ankur, you have a thought on this?
Nope.
You just get your next round. That's what it is.
But good companies should always get rounds done. Okay?
Let's talk about that. So how about this opinion? An agentic startup run by AI agents and a tiny human team can reach $10 million ARR on $1 million of capital. The fact that VC fund sizes are still growing proves that the ecosystem is misaligned with the technology. VCs are crowding out efficiency to justify their own management fees. Ooh, I'm going to use that for the next discussion of my VC friends. It's going to be fun.
I know I'm a small fund, and so I don't care about the management fee. I'm here looking for the carry. And so
You need
I'm
the
a small
return.
boutique fund,
Yeah.
and so I'm looking at those kind of good companies. And so management fees does not bother for me.
Any thoughts about that, though, when you see just on the thought of there are folks who are now raising today, and all they hear is these stories of a small team growing to $10 million ARR in no time.
And so, again, it comes back to the same thing, what I mentioned before, right? Out of this $10 million, how many of those $10 million are going to be like recurring to the next year? That is the key thing. I'm going to give like two examples here quickly. One is in my family, we had like 3 different licenses for one of these wonderful AI tools, one for my husband, one for me, and one for my daughter. And my husband decided one of these weekends, and he just asked what percentage of the time each one of us use? Why are we paying for 3 different licenses? And we just cut short that from 3 licenses to 1 for our family. And who is tracking this $10 million in revenue from the usage perspective and the adoption perspective, right? And so that's the key thing. That is where the main difference comes in, when actually the bottoms up buying is also like approved by the top down buying. With the help of great products like Flywheel, we can get that kind of a visibility with respect to predicting what is going to be happening. And the second example that I can give is when actually a Super Bowl weekend is happening. Of course, Uber Eats and all of the other DoorDash and Ubers, they are going to have like a big spike in Santa Clara or in a certain city. But we cannot use that one time as a predictability. Okay, this particular month in February, we had actually this kind of actually the up round. So every single month we are going to be like expecting the same kind of stuff. So when we VCs are also like looking at investing, and startups or raising their own money too, they should be thinking about, hey, what is going to be actually like time-based revenue, or what is going to be like a true repeatable revenue kind of a perspective, Raji?
That's a great perspective. I'll give you this opinion. The AI IPO pipeline is a bailout mechanism for bloated VCs, not a growth engine. The venture market has grown dangerously illiquid, leaving many companies trapped because AI startups demand such substantial capital. Public markets are becoming a compelling solution.
Rajiv, both of us know, and all of us know, the number of companies that has gone IPO in the market over the past 3 years. And so only the companies which are doing well can really get out in the market and survive today. And so if the companies which is going public cannot prove that, it is going to be actually a very big failure, because the public market does know, and they look at actually a couple of different kind of metrics. And so they also the public market loves actually AI, the changes that happens and things like that. But numbers like the basic income statement, the gross margin, the profitability, and actually the EPS and all of those things actually like in the growth year over year matters the most. And so, of course, we VCs need to have an exit out, because we are trusting, we are investing. There is nothing wrong in having good exits. And that is how even the market survives too. Otherwise, now the whole industry is like lacking good companies getting IPO'd. We should have great innovation happening, and those great innovations becoming public, and we should have more of Google's, Alphabet's, Nvidia's, and Palantir's or Coupa's of the world coming into the public world. That is how the ecosystem grows. And there are going to be like couple of bad ones, which is natural, which happened 50 years ago, which happened 20 years ago, which happened 10 years ago too. And the same will continue. But this is like a cycle. We cannot say that, okay, this is just like VCs or this is just like AI. We need to have all of these things happening, is my 2 cents, Raji.
We need to get them out there. I got to tell you, as an investor in multiple of these funds, we need to get these companies out there.
Yes.
100%.
All right, let's go to the game. I want to welcome you to the Spark Tank. Today, we're joined by two titans of the enterprise and investment world who specialize in scaling complex systems and fighting the signal and the noise. First, we have Ankur Srivastava, the founder and CEO of Flywheel. Next, we have Priya Ramachandran, the founder and managing partner at Foster Ventures. Ankur and Priya, your careers are defined by high-stakes decision-making and distinguishing between vaporware and valuable tech. But today, we are shifting the focus from cloud commitments and cap tables to the rich, layered history of Indian palate. This is the Spice Protocol, 2 truths and a lie. The rules are simple. I will read you 3 statements about Indian culinary history, from ancient royal banquets to AI-powered kitchens and space-age snacks. 2 of these are verifiable facts. 1 is a complete fabrication, a bug in the system designed to trip you up. I'll count down 3, 2, 1, and you'll reveal your answer at the same time. You have to show me your fingers. No procuring your answer from the opponent. Are you ready to see who has the best inference engine for Indian food history?
Yeah, bring this on. Let's go.
Let's go. Bring on the food. Okay, I'm going to read you 3 statements. You're going to tell me which one is a lie when I count down, okay? Number 1, black pepper from South India was such a coveted commodity that it was once called black gold and used as currency in Rome. Number 2, the first recorded restaurant menu in India dates back to the kingdom of Magadha, where travelers were charged by the weight of food consumed. Or number 3, the ancient Indian text Manasolasa from the 12th century describes over 300 recipes, including stuffed eggplant, milk sweets, and spiced rice. Okay, which one of these 3 are a lie? Black pepper, food consumed by weight, or this 300 recipes from the ancient text? Okay, 3, 2, 1. All right, we got some disagreement. Quick, Priya, why do you say 3 is false?
Because I don't think we had that much of milk sweets which came into the world until later the Persians came down to India.
Oh, I like that answer. All right, go ahead, Ankur.
I think it's very hard to weigh how much you consume by weight. I mean, if you've been to India and stayed at one of the hotels and just visited the buffet, like, I don't think that's a possibility to have at all. So I stick with number 2, but Priya threw me off a little bit, but I'm going to stick to number 2.
And the winner of this one is Ankur. Number 2 is a lie. Magadhan food weighing. While ancient India had dharamshalas and caravanashalas offering food to travelers, there's no historical record of menus or weight-based meal pricing. Pepper is currency. That is true. Roman merchants prized Indian pepper above gold. Pliny the Elder wrote complaints about Rome's draining trade with India because of this spice, giving pepper the nickname black gold. And then Manasolasa text, it is true, attributed to King Someshvara III of the Western Chalukya dynasty. The Manasolasa is one of the oldest recorded encyclopedias detailing royal cuisine, including recipes still recognizable today like vada and flavored milk drinks. So there you go. Get one from Amazon to your Kindle. Okay, I'm going to read you 3 statements. 1 is false. Here's the next one. A Bangalore-based startup recently developed a samosa printer. It's a 3D food printer that can print and fry filled pastries automatically. That's number 1. Number 2, Indian pizza first appeared in Chennai in the 1970s, replacing tomato sauce with spicy chutney to fill local palates. Number 3, in 2018, Indian Railways tested AI-powered cameras in kitchens to detect hygiene lapses before dispatching passenger meals. Okay, so samosa printer, Indian pizza, AI-powered cameras for hygiene lapses. Ready? 3, 2, 1. Ooh, dissonance again, so we have a shot here. Okay, Ankur, why 1 is false?
You know, I think in order for you to have an AI product, you have to have repeatability. And if I've seen anything, once again, from the buffets, as you can tell, I hit up the Indian buffets a lot, is that every Indian has a different palate for the same dish. And I think it's very hard to make a samosa recipe repeatable. So in fundamental notion, since it requires repeatability, I negate that one.
All right. Priya.
But it's Indian founders. They can go out and build anything. You see that, Ankur, you know?
I believe that they built it, but I just think it's going to only address a very small group of audience. And come on, they
You
say
know,
Taylor,
anyone
right?
can build a product today. They can build it up, but is it in use? Do they get funding? That's the question.
By the way, you want that Taylor, the street cart on the thing making your samosa and eating it. Unless this robot's on the street cooking it, I don't think people want that samosa.
No, we don't want. For sure, you and I won't eat that samosa. But I chose number 3 is mainly because, right, actually, AI is a term which has been just using recently. And so for sure, they might have had the CCTV back in 2018. If you tell that, yeah, they've done in 2022, 2023, for sure.
All right. You don't believe it because of the timing.
Yes.
Okay. I'll give you the answer. It actually is... Number 1 is false. Ankur, you win again.
Man, I've invested in a good guy's company. Now I'm feeling more proud of investing in Flywheel.
Better to be
Ankur.
lucky than good.
By the way, I don't know how I feel about losing against Priya. She's my investor. So, I know she's telling me that I'm
She loves you
legit trying to
anyway.
go the opposite direction.
You should feel happy. I'm just taking so much pride in investing in you.
I'm a very analytical person. So come on.
There you go. Okay, 3, of course, 3 for samosa printers a lie. While 3D food printing technology exists for pizzas and chocolate, no startup has unveiled a fully automated samosa printer yet, though it feels oddly inevitable. I hope it never happens. So number 2, that is true. Indianized pizza gained traction in urban centers during the 1970s and 80s. Before local chains arrived, local fast food joints experimented with chili, paneer, masala toppings, and chutney bases. I could tell you, within like 5 miles of me, I think there's like 7 places that are just Indian pizza places. And then number 3, it's actually true, and I'm surprised. Railways Catering and Tourism Corp, IRCTC, implemented AI-enabled CCTV and image recognition systems for cleanliness audits in base kitchens beginning in 2018, monitoring live feeds.
And fun fact for you, that was driven by the fact that more Western travel was taking place and they were getting ready for the bullet trains.
That's right. They have to protect the tourists.
You used the term 2018. That was the thing.
That was a good catch, too. And I would have probably said the same thing. Okay, round 3. So here's what I'm going to do. To give Priya a shot, I'm going to give this question 3 points. All right? So this is your chance to knock out Ankur. Here we go. Everything on this. The triple point score. All right, number 1, which one's false? Medieval Indian royal banquets sometimes featured perfumed rice, where cooked rice was scented with rose water and sprinkled with edible silver leaf. Number 2, one of the earliest written references to biryani by name appears in 16th century Mughal text, describing a layered rice and meat dish cooked in a sealed pot. Or number 3, a 4th century BC Jain text describes a strict ban on all root vegetables, but explicitly allows onions and garlic as festival foods. Which one is the lie? Ready? 3, 2, 1. Oh, this is the one. Ankur says 2. Priya says 3. What's your why?
I think biryani was probably earlier than that. So, and I think it would be probably written in another culture. So I don't know if that was
That was your winner. Okay.
that was my false one for sure.
Okay, Priya.
Anything that's underground, it's a no-no for Jains. And I don't think that was given as an exclusion.
Well, there you go. So, Ankur, you want to change your answer? No. Well, guess what? Priya comes away with the victory on this one.
It's been a great journey.
All right, let us jump right to personal closers, because the other 2, of course, are true. And actually, the earliest they've heard of biryani was in the 1600s. And then perfumed rice with silver. Of course, both of you thought that was true. That makes sense. So it's a thing. We see it in foods today. Let's go to Priya. Quick answers to this. If you were putting together a team for something important, what's the one quality you'd prioritize over skill or experience?
Attitude.
Why?
Because then they can take the failures and just move fast. And even when they're doing something very successfully too, that's not going to be like making them just fly high. Just the positive is the key thing.
Awesome. Ankur, what's a belief about leadership you held early on that you've since completely abandoned?
The one thing that I'm learning, and it's interesting because when you become a startup leader, you are evolving as an individual, is that you have to be able to let people ramp up in accordance to their comfort level. You can have very talented people that may take a little bit more time to ramp up up, and not everybody's going to catch up at the velocity that you may operate on. And so what I've learned is patience. Patience has become quite an important asset in the journey that we're in, because once people actually adopt your view and understand it fully and internalize it, they can then accelerate their journey as well. So patience has become an important asset at this point.
Sometimes the one who adopts a little later is truly in with you in a way that you probably didn't anticipate.
My mental model is velocity plus quality plus timely delivery divided by cost equals achievement. And at some point, velocity will be slow, quality will be there, and their timely delivery will be short. But over time, as they become more honed in and comfortable, they'll become better and accelerate all three areas. And all three should be projecting to the right very quickly. That becomes a great way to then have them match you on your achievement as well.
Love it. Priya, what's something you wish you could experience again for the first time?
Driving in the US, because I totally sucked. But yeah, today I'll do it. I'll do it much better. I'm seriously telling you, Rajiv. And this is like a fun discussion, and that's why I gave you this example. Okay.
Driving for the first time in the US versus driving in India?
Oh, I never drove in India.
That's why. Okay.
No, when I drove in India, oh my God, my driver uncle, that's how I call him. He just told me, Priya, it's okay, ma. I'll drive you anywhere. Give me a call. Please don't put anyone in trouble. And that's it.
I've been going back and forth for 20 years, so I still won't drive. Ankur, what's something you collect, save, or hold on to that other people would probably throw away?
One of the things that I collect a lot are when you have something really complex that you're trying to solve for, and you're able to solve it at that moment. I'll typically collect an asset that was there at that time of solving that problem. For example, I wear bracelets on my hand, and I wear them typically to illustrate that I was able to complete a journey with something. And so those bracelets are something that I collect, I maintain, and if any of them break, I will actually go back and get a new thread and put them back together because they're very meaningful. So I've got quite a pile of them, and they are very meaningful to me from, different things that I've been through in my life. And I collect them because they're a great reminder of how I was able to get through it and effectively still be standing here today. So those are some things that I hold on to very closely.
I love that. That's great. Here's something quick for both of you. If you have a 30-minute conversation with any version of yourself from the past, which age would you pick and what would you discuss?
I think I've just enjoyed every one of my years since I've been like 18 or so. But one of the key things I would say is when I was 29 and I had duty, my first child, that is actually the age, the first time ever I became a mom. After 2 miscarriages, it was a very, very, very special thing. She's the one who taught me for the first time as to what truly patience is, as Ankur was mentioning from the startup world perspective. And, how we can forget certain pains very fast as soon as, and it just gave me like a true meaning of life.
Wow.
I would pick 2 versions of me to have dinner with. And one would be the 21-year-old me. And then the second one would be the 75-year-old me. And the reason why I would want to sit down and have that conversation is the 21-year-old, I would tell him not to change a single thing that he does in his life because it will all work out. And even though there are going to be peaks and valleys, those valleys are important because the peaks will be higher after that. So I would just reassure him to say that there's that confidence that you need to hold on to. And I'm hoping that the 75-year-old can look at the 45-year-old me and give me that same assurance as well, that life will be just fine. And honestly, just cheers to the opportunity to be here. And that's really what I would do with that.
Amazing. Well, I want to thank both of you for coming on the show today. I think you both offer a really interesting perspective on what's happening in today's world, in technology world, and the entrepreneurial world, what's happening with AI, and what's happening with all of our lives as we go through this amazing journey of innovation and discovery. So thank you both for joining us today.
Thank you, Rajiv. But Rajiv, I'm not going to leave you until you also give your opinion on the final question. What are the 2 years? What is one age that you would go back to?
I would go back to when I was 18, and I would say to myself, you went on this journey towards engineering, and instead of just taking it as a class, I want you to just live every minute of it. So I was into I would do the work for a different objective later. And I wish I had just bathed in it more than getting the work done and getting a good grade. It's just like live it, eat it, touch it, make it all part of your world, as opposed to looking for ways to do other things that I really enjoy. And I think that was that journey towards discovery of who I was during that time, right, where I was going through something that I knew I felt I needed later, as opposed to just living it. And then later on, I learned as I'm doing companies and all the things I do, I'm really doing what I love to do. Well, thank you both.
Thank you.
Thank you so much.
All right, thanks for listening. If you enjoyed the pod, please take a moment to rate it and comment. You can find us on Apple, Spotify, YouTube, and everywhere podcasts can be found. The show is produced by Anand Shah, production assistance by Taryn Talley, and edited by Laura Ballant. I'm your host, Rajiv Parikh from Position Squared, a leading growth marketing company based in Silicon Valley. Come visit us at position2.com. This has been an Effin' Funny production. We'll catch you next time. And remember, folks, be ever curious.